So again, we're going to pick up with objective 5, where we're going to work through all of the journal entries for the process cost system. Many of them will be very similar or exactly the same even as what we did in the job order cost system, but there's a couple that are different. So just like we did with the job order cost system, I hope you've got your notes printed. You have your chart in front of you, that production cost report that we filled out. You have your notes in front of you where we're going to do all the journal entries, and then I hope you have a blank sheet of paper that you can keep up with the T accounts on as we go through this. So when we do this, we're going to first accumulate the cost, assign them, allocate the overhead, and then adjust the overhead at the end. Now, to start with, you're going to want to go ahead and draw two of your T accounts, the work in process assembly account, which has a beginning balance of 13,710. That number should sound very familiar. We looked at that, came straight off of the original data that we were given. And then the cutting department, I'm just telling you now, has a beginning balance of 23.2. If you went through that objective in the book, you would have seen that. If not, just trust me, it does. So we're told that during July we purchased materials on account of $175,000. These are both direct and indirect materials. They're materials for both the assembly department and the cutting department. Since it's on account, that means accounts payable or accounts receivable, but since we're the buyer and we're going to have to pay this bill, that means it's accounts payable. So we're going to debit raw materials, credit accounts payable, and then you'll want to post this to your T account. So draw yourself a raw materials T account, plug 175 in it, draw yourself an accounts payable T account, credit it for 175 also. So then we're told that we assigned direct materials to the two departments. Of the direct materials, 130,200 went to the assembly department. We assigned 19,000 of direct materials to the cutting department and 2,000 of indirect materials. Now the indirect materials would be for both departments, right? So remember, direct materials go directly into work in process, but we have two work in process accounts now. So I'm going to debit work in process assembly for 130,200. I'm going to debit work in process cutting for 19, and then I debit overhead for 2,000. So I'm going to have three debits in this journal entry, and then I'll credit raw materials for the total. Okay. Now, one thing I want to point out, you've got to keep track that you have two different work in process accounts. So you want to abbreviate WIP-A and WIP-C. Sometimes students like to call them Department 1 and Department 2, but as long as you call it Work in Process Department 1, Work in Process Department 2, that's okay. So we're debiting our three inventory accounts and we're crediting raw materials inventory to decrease it. So again, take a minute and post these to your T accounts also, and I'll show you all the T accounts at the end so you can check, but you want to go through and be posting these. Now we also have direct labor. We have 22,090 of direct labor to the assembly department, 3,840 of direct labor to the cutting department, and $1,500 of direct labor to the overhead department. So again, just like materials, direct labor goes directly to the work in process account. So I'm going to debit work in process assembly for 2290. I'm going to debit work in process cutting for 3840, and then I'm going to debit overhead for 1,500. And I'll credit wages payable for the total. So again, take a minute, pause the video, and write down your journal entry and plug this into your T account. Now, we're told that we have 30,000 of machinery depreciation and 19,000 of indirect costs that were paid in cash. Now, what I'd like for you to do to get to where you start doing is you pause the video and you write down what you think the answer is, and then you'll restart the video and see the correct answer and listen to the explanation and check yourself. But I really want you to engage with the content, and the more that you engage, the more that you really try to answer the questions and do it yourself, the better your understanding will be. So hopefully you've paused the video. If you haven't, do it now. And then come back and we'll look at these journal entries. So remember, machinery, normally we would debit depreciation expense, credit accumulated depreciation, but because this is depreciation on our factory machinery, we're going to debit that overhead account. And then for the various other overhead items that we paid in cash, we'll also debit overhead and we'll credit cash for those. So again, take a minute and post these to your T accounts also. Now we're told that we use a predetermined overhead rate to allocate the cost. They've already done that calculation for us here, but of course we know how to do this because we learned that back in chapter 2. But once they did the overhead allocation, we're told that we're allocating $42,000 of overhead to the assembly department and $11,000 of overhead to the cutting department. So we're going to debit work in process assembly for 42, debit work in process cutting for 11, and credit overhead for the total. So again, notice that there's only one overhead account for all the departments. So I hope you posted all your T accounts because we're getting ready here. So now we're told at the end of July, we are transferring those 40,000 puzzles out of the assembly department into the cutting department. And we know that those 42,000 units puzzles cost $176,000. We just calculated that on our production cost report. So that 176 should sound familiar. You might want to go back to that chart. You might want to put a star or highlight or circle it because that's where that number is going to come from. Now, if they're going into cutting and out of assembly, we want to debit the cutting department and credit the assembly department. Remember, we learned this back in chapter 2. You debit the account it's going into, you credit the account it's coming out of. So we want to debit work in process cutting, credit work in process assembly. And I will tell you, this is an entry that students tend to get wrong. They tend to get this one mixed up. So star this one and make yourself a note so you'll make sure to get it right. Now we're told that at the end of the cutting department, they're going to transfer 38,000 units out of the cutting department and into finished goods, and those 38,000 units have a total cost of $201,400. If we had done the production cost report for the cutting department, we would have found that $201,400, but for right now, just trust me that that's the right number. So again, we're going to debit the account that they're going into, credit the account they're coming out of. So I want to debit finished goods, credit work in process cutting. So again, make sure that you've posted all of these T accounts because this is important. Okay. So we are told that we sold 35,000 puzzles, and the total cost of a puzzle, the total cost to us is $5.30. Now let me show you how you could have calculated that. Remember on the previous slide when we transferred 38,000 puzzles to the finished goods account, and we knew that those puzzles had a total cost of $201,400. Well, guess what? $201,400 divided by 38,000 units is $5.30 per unit. So that's where we're getting the 530. So when we sell these puzzles, we're going to move them out of finished goods into cost of goods sold. We're selling 35,000 of them, so at $530 a piece, that's a total cost of $185,500. We're told that the selling price is $8, so the total revenue that we are earning is $280,000, which is the 35,000 times $8 a puzzle. So now that we've sold the puzzles, we've got to do 2 journal entries. Remember, the first entry is to record the sale. So we'll debit accounts receivable, or it could be cash, for $280,000, credit sales revenue. And then we're going to do a second entry to move those goods out of finished goods inventory into cost of goods sold. So we debit the cost we're going into, credit the cost we're coming out, credit the account we're coming out of for the 185.5. So this journal entry is for the $8 a piece, the selling price, and this journal entry is for the $5.30 a piece, which is our cost, what they cost us to make. So again, take a minute to post these to your T accounts as well. So now when we get to our overhead T account, I hope yours looks exactly like mine does here. So if we total up all of our debits, we'll find that our debits total $52,500 and our credits totaled $53,000. So if you remember, the debit side of the T account was called the actual side, and the credit side was the allocated side. So in this case, we allocated $53,000. We should have only allocated $52,500. So we over allocated in this case. So in this example, overhead is over allocated. We allocated too much. So to close out overhead, since overhead has a credit balance, I would need to debit overhead to close it out. So if I debit overhead to close it out, I will have to credit cost of goods sold. So on this entry, to close out overhead, I'm going to debit overhead and credit cost of goods sold. Now remember, cost of goods sold is an expense and has a normal debit balance. So when I credit it, I am reducing it. What I'm saying is that those puzzles that I sold, $530 wasn't the real cost. $530 is a little bit too high. They were actually a little bit cheaper to make than $530 a piece. So now, hopefully your T accounts look exactly like this. And so if we look at our cost of goods sold T account, notice that it has an ending balance of 185,000. So we reduced it a little bit. Notice that work in process has an ending balance of 32,000. That's exactly what we said it should be on the production cost report that we prepared in the previous objective. We said that ending work in process, those 10,000 puzzles, would have a value of $32,000 in it. This is, to me, in my opinion, this is the coolest part of accounting because it works out perfectly every single time. It always works out, and it's just beautiful the whole way. We also look at our finished goods inventory account here. Notice that we have an ending balance of 15,900. So I want to point out, remember, we transferred in 38,000 units. We sold 35,000 units. So this 15,900 represents 3,000 units. And guess what? This is the coolest thing. If you take 15,900 and divide it by 3,000 units, you know what you get? $5.30. So those 3,000 units that are still in finished goods inventory have a cost assigned to them of $5.30, which is exactly what we said it should be.